Welcome everyone, this is trigg.minnick. Today we're here to discuss the second phase of my Homebuyer playbook. We're putting this in a sports context and we're calling this session the pregame warm-up. In our previous 1 out of 3, this is 2 out of 3, we call that the preseason. That's where we focus on building our 3 major home buying muscle groups. That's our credit, our money, and our income or employment. Those are what will give you the strength to compete in the home buying marketplace. So that's what we're trying to position you to do. Now, if you missed the previous session, 1 of 3 in this home buying playbook series, which was our preseason, feel free to go back to my YouTube channel and review that. And as always, if you find this information valuable and useful to you, please share it with other people that this can help out with as well. After this session, the one that will conclude this particular series will be our game time. And this is when we will be viewing homes, making offers, working through the transaction and the escrow, and just generally getting ready to close and move into that home. The reason I mention that now is to help you keep in mind that we're laying the groundwork for you to have a successful winning game of your home buying journey. So let's say you're playing in a local, say, basketball league. What's the first thing you do when you get to the gym for the game? Well, if you said start warming up, you actually probably got a little ahead of yourself. Might not realize it even, but I bet you actually look for your teammates first, especially if they're ones you know. You may already have your teammates, and they're probably not all alike. You probably don't want them to be. You want people that can do different things, fulfill different roles. See, home buying, like basketball and most sports, has certain roles that we needed filled to help us win. Just like a good center won't make a good point guard, an inspector and a real estate agent have different capabilities and skills that make them good at what they do. So this is really the time to be gathering up your team and knowing what it is you're looking for to make that successful. Some of the positions you'll need to fill are your loan officer, your home inspector, your real estate agent, but also things like insurance agent, title agent, and then there's some that you may or may not need to fill. We may need some repair work. We might have certain specialty inspections that need to be done, like mold or HVAC or roof or foundation. We may decide we need a painter before we get moved into the house. We may need the garage door fixed. We may need a plumber, locksmith, septic, handyman. HOA, we probably need to at least communicate with an HOA representative if you're going to a community that is HOA. So we got to really plan for having all those roles filled. So how do we choose? And when do we choose each one of those? Getting pre-approved early on in the process is very helpful. And we're definitely going to recommend that. We'll talk more about that. Many real estate agents won't even start really working with buyers until they have been pre-approved. And many sellers won't even allow somebody to see their house on the inside, to tour their house, until that pre-approval has been provided to the listing agent. So you could start with a good loan officer. Nothing wrong with that. That is one approach that makes sense. If you know and trust at least one, probably be a good way to go. At the same time, keep in mind that real estate agents are routinely working with these different professionals. And we're often staking our reputation, or at least a deal, based on how well these people perform their duties, their jobs. So agents inherently will have good working knowledge of a variety of different professionals that they can help you sort through and make a few recommendations for. And agents will also be relied on to communicate with these professionals during the course of your transaction most of the time. Good working relationships can go a long way towards efficient, smooth transactions. So at least listen to what an agent suggests about what to look for in these other roles and maybe who to work with. And you can expect your agent to provide at least 3 potential recommendations for each of the different categories. It's really kind of a ethics legal issue that they're put into where they should do that. And either way, your loan officer, your real estate agent should be early additions to your team. And they can help you find other teammates as and when needed. Of course, you can find those on your own, and you can certainly sort through the recommendations that are made by your other professionals as well. So let's talk about some of the duties that you should be able to expect your real estate agent to do on your behalf during this entire home buying journey. And really, we could break those down into 5 key categories. I guess you could say 6. The first one is preparing you to get into the game, preparing you to go on this home buying journey. Then it really goes to viewing homes and making sure we do that in a way that aligns you to the homes that make sense for you. Then we want to be able to make offers, get an offer in, get an accepted offer. And then once we get that accepted offer, I want to be able to navigate the transaction. There's a lot that can go into making sure that offer acceptance until closing. There's deadlines to meet. There's certain things that have to be done at different times and intervals, information that needs to be discovered and acted on. We'll talk more about that later on. And along the way, probably also refer you to a variety of different professionals to help with the process. Hopefully, it's a limited number and it's a fairly smooth process, but that's not always the case. We have to be ready to be able to help you. Now, while we're talking about working with an agent, and obviously selecting one's really important. The one you select is basically going to be you could say your coach or your quarterback on the field, or however you want to term it. But your agent is going to be kind of at the hub of the entire process for you. And it's really important that they are able to communicate with other professionals, bring other people in as needed, and to make this seem, hello, Curious Kiwi. To make this process seem more effortless than what it actually is anyway, and smooth and hopefully stress-free for you. And then to the trust part, it's not about like, oh, do I trust that this person's going to cause me ill intent or anything like that. It's really about trusting that agent to prioritize your goals, your desires, and aligning that with your home search and the entire process, really. So how do you find that? How do you determine that in the process? I think when you initially meet with them and you're kind of getting a feel for each other, pay really close attention to who listens with the intent to act on what they hear from you, and who dives in and asks a lot of questions about you. Not on and on and on and on and on about themselves and what they've done or what they could do, but really how they can benefit you. So you need someone that listens very well. Now, there are some guiding points that you'll need along the way. Real estate professionals are trained in certain areas, have expertise that you may not. And so sometimes they'll have to kind of put their foot down or be specific about market or contractual realities and hopefully guide you away from potential problems. All right, let's talk about your loan officer, because that's another really key role for this whole process. So your loan officer, your lending company, we want to make sure we get that right. Most likely your real estate agent can recommend companies that they've worked with before and that they know and are comfortable telling you are good to work with and efficient in what they do, and probably have loan programs that are specific to the criteria that you've discussed with your agent regarding your credit, income, your situation, first-time home buyer, investor, wherever that is. And a good loan officer is going to make sure that they don't cause any challenges through the process, and they make it smooth and efficient for us. Rates and terms are important as well, obviously. Most of the time, they're, at least in this market, they're really pretty competitive with each other given the same type of loan that is needed. And so having a variety of loan programs available can be important too, especially if you have specialty things like VA loan, down payment assistance, investors, a rental or an investment property, second home, those kind of things. Not all lenders really specialize in those, so we want to make sure we get somebody that really understands and can find the right program for you for that. Because some companies, some lenders have kind of a limited scope of programs, so they may try to put you into their particular portfolio instead of offering that down payment assistance program. So at least one on your list should be a brokerage that can explore a variety of options for you. Now, at this point, probably the most important thing for your lender from a specific task that he needs to do for you is the pre-approval letter. I'm going to say that again, pre-approval letter. See, in the current market, a lot of homebuyers, especially first-time homebuyers, are underestimating the significance of that in not just the entire process, but in getting an offer accepted. See, to be competitive on offers on homes, providing a strong, well-written pre-approval letter is really important. Think of it from a seller's standpoint. With homes going under contract so quickly, when a house has been on the market for a long time, and these days that may only be seen as like 20 days, people start to wonder, what's wrong with it? Why has it been on the market for so long? Then they go, well, if so many other buyers don't want it, hey, I don't want the one that obviously no one else wants. So they'll start to focus on other opportunities. Sellers know this. So to avoid this issue, sellers will prioritize offers that appear most likely to get closed and not have to go back on the market. The pre-approval letter can be a huge differentiator here. So we're going to talk about some nuances in the pre-approval letter that really can carry some weight in how they get interpreted. So how does one pre-approval letter differ from the next? For starters, they differ in how much is actually verified in the review process that the lender does. Well, there isn't really an official standard. Most will consider a pre-qualification as the lender took your information from your application, did a soft credit pull, did their calculations, and provided you with an amount they would approve you for based on what they think your interest rate would be. They'll guesstimate the HOA, the taxes, the insurance. That assumes that all of your information is accurate. And on your pre-qualification letter, it will say, pending verification of the information that was provided, something to that effect. It also assumes that you can verify all of that in a way that will be acceptable to that underwriter. Sometimes that's the case, sometimes it's not. If you're on your job for more than 2 years, you get a W-2, all your claimed assets are in a seasoned account that you own, all should be well. But what if a chunk of your income you stated was from a second job, or from overtime, or commission-based, or you're self-employed, or you've been on your job for a year instead of 2 years? Will the amount you told them hold up when their underwriter gets involved? I'm not sure. Will it change the amount of the pre-qualification? You probably don't know the answer. And the seller sure doesn't. And that's the real point. Heck, the seller doesn't even know if you're W-2 or self-employed. For all the seller knows, you made up your income thinking you could buy more house than you can really afford. So when a seller sees a weak, uncertain pre-qualification with no verification of income, how likely are they to accept that offer? Do you want that to be what your offer is like? So what's the answer then? The answer is a pre-approval, not a pre-qualification, a pre-approval with strong wording that income, employment, and preferably proof of funds, proof of down payment, proof of closing costs have been verified by the lender to the extent that's necessary at this moment. Now, there'll still be a stipulation that employment will be verified closer to closing day, and probably also that the house must appraise for the contracted value. That's all pretty standard and acceptable. Although really strong buyers with great credit and a lot of money down may have the option to waive the appraisal entirely. That's kind of a separate issue. The point here is that the strength in the approval letter that will be needed for your offer, it speaks volumes to the sellers as to their likeliness to be able to get closed. So let's take a look at some different ones. And each of these will have some general information like the lender's name, the mortgage loan officer's NMLS number, their contact information, your information on there as well. The formats will differ a little bit, and even some of the terms and stipulations that they put on there will differ a little bit. Okay. Well, let's review some of these so we can point out what is probably more likely to be considered strong by the sellers who are making the decision on which offer to accept. All right, so we're going to look at a few of these different pre-approvals, pre-qualifications. On this first one here, there are some things that I like about it. There are some things that maybe could have been a little bit better about it, but this is from a lender that I really like, Home First Lending. They do a good job, work with them on multiple deals. Great at communicating and staying in touch and making the process fairly easy for all of us. So on the pre-approval letter, note that they list out the loan type, the purchase price, down payment, loan amount. Those should really be on all of our pre-approval letters. And they have the date of the pre-approval as well, and that's important. As well as there really should be an expiration date because they're all a little bit different from how long they will state that this loan approval is good for. Is it good for 60 days, 90 days, 120 days? That would be good to have on there. It does say down payment has been verified. A lot of them don't do that. Even if they'll verify income, they may not have verified down payment. So it's great that they say down payment has been verified for 2 months of bank statements provided and confirmed to have the available funds for both the down payment and cash to close. So that's good that the seller knows that he has this money. It doesn't really call out specifically whether income has been verified or not. And if you look below, or in the middle here, please be advised Home First Lending has pre-approved the above named buyer based on information provided by the borrower, a review of his credit report, income, and funds available to close. And then it says an approval letter is subject to, and the important part to note here is it doesn't say whether we need to still verify his income amount or not. A little fuzzy. I kind of could assume that it doesn't, but we don't like to make assumptions. So that part of saying that the income was verified or not could have been a little more clear on that one. So on this one, it gives the loan amount, the loan to value, which isn't as low as the previous one. Gives the interest rate, and I like that it does say the principal and interest payments. It kind of tells you what payment amounts that they're qualified for, principal, interest. But really, when they verify all this and when they determine the debt to income ratios, it's principal, interest, taxes, insurance, and any HOA. So when I looked at this, honestly, I didn't know whether or not the loan officer had put that into his pre-approval process, and I had to call the loan officer to verify how much home they really qualified, because this left me hanging a little bit. So it says you have been pre-qualified for the above referenced mortgage subject to the following terms. It does not state anything about whether income or funds or employment have been verified. So it's great that they have one. It's great that it has the amount on there that they were looking for as a purchase price, as a mortgage amount, but how far did this go? How confident will the sellers be when they see this that these buyers can really close on this house? So here's another one. So this loan pre-approval letter, now obviously I've taken out personal information and most of the company's information as well. I just really want you to focus on the format and the information and how these can be different from one to the next. So notice that they say, after reviewing your credit and personally verifying your income and assets based on the documents provided, we are pleased to inform you that you have been approved for the home loan below. So pretty strong that they have verified the information. So when they say in the pre-approval loan terms that the loan amount is for $400,000, down payment's $100,000, it does appear that the loan officer has verified that $100,000 is available. It doesn't specify whether the closing costs are also readily available or not. Kind of have to make a little bit of an assumption. We don't prefer to do that. Your pre-approval is subject to contract, acceptable appraisal, no changes to current credit and financial position. That's all fine, and satisfying any other conditions. So none of the subject twos are saying, oh, we still have to verify something. We still have to verify something. So it's a stronger, it's kind of two places where we look at that say what was verified. One, they said up here in the statement, this was verified. And two, they didn't say down here that we still have to verify this. So that's pretty good. A seller can look at that pretty favorably. Look at this one here, this pre-qualification for purchase and to whom it may concern. So this letter serves as a pre-approval for a loan in connection with the purchase for the above referenced buyer. We haven't selected the property, but here's kind of what we're looking at, basically. Purchase price, loan to value, loan type, interest rate. Doesn't give the payment. So we don't know if this seller, this home is in a particularly high tax area or particularly high HOA community. maybe that affects the debt to income. So there's still, not much going on there with the amount even. And then there's nothing in here that says, hey, we verified. It says, based on personal information provided by the borrower via telephone and subject to verification. So this one really, if I'm a seller or if I'm a listing agent, I'm not prioritizing this as much as one that has a stronger statement. All of this has been verified. We have no doubt that this buyer is capable of closing unless something changes. So you can see that there's some differences between the various ways that companies write these and how a seller can interpret the likeliness of getting to closing with that buyer. All right, we're really getting ready, getting warmed up, feeling almost ready to go, right? We've covered some ground. In the first one, we talked about building our muscles, getting our income, our credit, and our employment all right and up to par and ready. And now today we've talked about, things like building our team, getting our pre-approval letter, selecting our real estate agent or loan officer, and things to look for in that regard. So we're getting closer, man. I hope you're feeling like you're getting more and more ready. And now that we've gotten that far, we're ready to solidify our price point, right? Not quite, sort of. Okay. The pre-approval letter will tell us what is the maximum amount that the lender will let us finance through them. That doesn't mean you have to buy that much. Okay. You should think about your budget. Think about what amount really makes sense for you and your family. So let's say you're approved for $450,000, but a $400,000 home would be just fine for you. And you've looked at some in that price range, and yeah, you would be happy with that. That would be a good move for you. Keep in mind, because that $50,000 difference in this example will mean a little under $300 difference in monthly mortgage, subject to differences in interest rate, PMI, insurance, tax differences. So that's just a ballpark. Don't hold me to that amount. Is the difference in homes at that point more important to you than the difference in that payment? And that's a question that really only you and your family can answer in each instance. So on the flip side, if you are expecting a good pay raise or a promotion, or maybe you have a second source of income that the underwriter wouldn't count for whatever reasons, maybe you're comfortable going to that maximum. Maybe there's other things that weren't considered in that you know more about than other people. So that has to weigh into what you think is your budget. You also need to consider things like what else you plan on doing with your money. You might have some outlier things that the underwriter doesn't think of. Maybe you like taking a lot of vacations, or your family lives across the country. So, you want to fly home pretty frequently and spend money on airfare and stuff on a regular basis. Whatever, things that affect your budget. Maybe your kids, you insist that they go to a really good private school and you're willing to fork out money for that. Well, that affects your overall budget. So you need to plan for this in the amount of home that you're willing to buy. So some of the considerations aren't always calculated into what the loan approval process takes into consideration. I also want you to keep in mind that especially if you're going from apartment living to a home, you're going to have some costs that maybe you're not used to, like maintenance for the home, upkeep, landscaping. Maybe you got to buy a mower. Maybe you're going to pay somebody to mow. Or if you're going to get a pool, you're going to have extra maintenance costs associated with keeping your pool in good condition as well. But also monthly utility increases. It's not uncommon for a apartment to be a half or a third of the expense of the utilities of a home, especially if you're going up in size as well. So you got to consider all of these factors in the amount that you really want to spend on your home and kind of get to a price range that will work for you and your family. I don't want you to become house poor as your favorite realtor. I would prefer you are in a great position to move up in a few years, maybe buy an investment property, maybe build some wealth. That's a better long-term plan than always being strapped because you bought this amazing house that we all loved when we went to see it, but it really pushed you to your limits and made you not be able to do other things and enjoy your life as much in other regards because you got a great house and it's great while you're there, but we got to stay here because we can't afford to do anything else. So don't be house poor, okay? So now that we've selected our realtor, we've selected our loan officer probably, and we're getting closer to our budget. We're trying to think through our budget and how much we really want to spend on the house. We're almost ready to start really looking at houses. Your realtor and you should have a really good in-depth discussion about what it is that's important to you in a house and what things you prioritize versus what are, yes, I'd like this, but this is secondary. You might like a pool, but you know, the difference in how much it's going to cost to get that pool, maybe it's not worth it. Or you might prefer to have a fenced-in yard, but a little Toto, I can put them on a leash and take them outside as well. So it really just depends on your priorities. So you should have that discussion, vet out all those priorities, and work through putting yourself in a situation where we can confidently say, we're going to look at houses that are going to meet 80% of what it is that you're looking for and be efficient in our search that way. And especially in a market like this where homes are going really fast, that is going to help us be efficient and be able to react in a timely manner because we're confident we're looking at the majority of the houses that are going to fit your criteria and priorities. So that's really important. I want to make a note that if you're looking to buy into a community, which in Florida, it's a lot of planned or urban development type of communities, and that means that the majority of the places here have HOAs. And so there are some particular things about HOAs that we probably should be aware of going in, depending on your scenario and kind of how you live in the house and whatnot. So let me explain. Instead of waiting till you're under contract and inspection period, which is when most people will consider these things, if you have some outlying things, it's really better to investigate some of this up front, especially for any communities that you think, yeah, that's a community I'd really like. I'm going to put that in my top 2 or 3 of communities that if a house comes open that fits my house criteria, this community is one of my favorites. So do some research and see what you can find out about what type of restrictions the HOA may have. So for example, some HOAs won't allow outside parking for recreational vehicles. If you have a boat, if you have an RV, if you have a company car with the logo on it, you can't park that in your driveway or on the street in some HOAs. So it's good to know these things if they apply to you up front. In some communities, you can only park a certain amount of vehicles. So if you're a family and you got teenagers and you got 4 or 5 cars that are in and out of your home that belong to your home, you might have an issue. So we need to investigate. If you're planning on renting your home out immediately or down the road, you need to look into what the rental restrictions are in the community as well. Most HOAs are going to have some level, at least, of restrictions on that. So we need to know that. Outside storage, if you have a lot of different stuff, can we have a storage shed outside even? That can get regulated. So you need to know about that. If there's any other potential issues that would cause you to not want to live in the community, find out as early as possible before you spend a lot of time looking at different houses in that community and getting your hopes up and really just, okay, so a lot of what we've talked about as we are about to conclude the pregame warm-up is really about assembling your team, making sure you're on the same page with your team, and getting what you need out of them initially. So your realtor is going to help you hone in on what it is you want from the house. Your lender is going to help you with your pre-approval. One, be prepared to make an offer in a timely fashion, and two, to set that amount so you know what houses to look for, what price range to look for anyway. And then you need to have the conversations with yourself, your family, to say, okay, well, I was approved for this. Do I want to go to this, or do I want to be below that based on my other budget considerations? So that's really what we want to focus on, primarily on the pregame warm-up time. And as we do that, we're getting really close to being able to go see homes, and do so where we feel confident enough where if we saw a home, hey, let's act, we're ready to go. As we get close to that point, what will happen is you'll get a lot of documents thrown at you. Okay, you'll have to sign a lot of different documents. Now, if you are of the mind to want to read these documents letter by letter and understand everything that's in them, it probably would behoove you to review the templates for those documents ahead of time. And those are very much templates that are used, very consistent documents that we fill in certain information for. Now, your realtor legally cannot interpret a contract for you. That is considered practicing law. And it is illegal for anybody other than an attorney to practice law. Now, your real estate agents are quite familiar with these contracts, work with them on a daily basis, but really that interpreting that contract and what all that means is kind of a fine line for us to have to deal with. And at the same time, we do want you to be comfortable with what you are going to be signing. So some of the more standard disclosures, or you're going to have, almost always you're going to have a seller's property disclosure. You very likely could have an HOA rider or disclosure, as they call it. And your contract, which right now is 14 pages worth of legalese. So there's a lot that goes into that. And there's a lot of protections for the buyers, and there's protection for the sellers to a degree as well. So we got to be able to work our way through that contract and be comfortable when it comes time to sign those documents. There could be other addendums and whatnot that are needed as well, where you have an escalation clause, whether you have a condo rider, things like an appraisal contingency, mold inspection, right to inspect, right to cancel. In some homes, if it's an older home, like a 1978 before, you're going to have a lead paint disclosure. You may have a lease purchase or lease option that we want to include into the contract to make this work in a timing basis for everybody. You could be under backup contract. There's actually an addendum to place as a backup contract. So there's really a lot of, and there's some other things, and you can see those on page 12 of the 14-page as is Florida contract. And there's a whole list of different addendums that could be included. So I definitely don't say, hey, you got to know all these different addendums. But what I'm saying is during game day, any number of these could become relevant to your contract. And the fewer of those that you're seeing for the very first time, the more room you'll have mentally to think through this and be able to make your decision. So some people are just totally okay. Contract realtor said it was okay, I can sign, blah, blah, blah. But we really encourage you to read through the contract and understand it. And if you're going to go through it line by line, if you're going to have questions about it, let's get that done before we have the blitz in our face, right? So we don't have to panic. We don't have to throw the ball straight up in the air because, well, we don't know what to do. We got to act fast. No, let's be prepared. Let's be comfortable. in making our decisions. And this is just another step that'll make you that much more comfortable in being able to move forward. One last part, then really I should have mentioned this in the preseason. Leading up to your home buying game day would be a horrible time to change jobs without discussing it with your lender, or to go buy a new car, or to open another credit card. Those things can affect your ability to purchase, especially if you do those either once you're under contract or right before you go into contract. So don't make any big financial move purchase before discussing it with your loan officer. And one last thing, so I don't want you to get overwhelmed, and I know we can be prepared to handle the full court pressure that could come our way. Limited knowledge is often what slows people down. And this could potentially lose you the home, and we can avoid that. If we get in a stressful situation and that causes us to take 2-3 days to decide if we want to move forward, or to review a couple of pages of the contract because we don't understand the way it's written and what that means. And meanwhile, we saw this house, we love this house, we want to go buy this house, but we're taking our time to make these decisions because we don't understand things as much as we could. That can lose a home for us. Okay, so we want to avoid that, and we can avoid that by making you more comfortable about this process and the journey that you're going to go under. So a lot of this to some people may seem kind of extreme in what I'm telling you should do before you even go see houses. But keep in mind, it's all designed to make the process smooth for you, efficient, and to make it where you can make good decisions.